Welcome to Weekly Recaps, where we discuss some of the top stories within business, technology, and politics. Starting off, Cloud was permitted by the Department of Commerce to re-release Fable 5. For those of you that are unfamiliar, Fable 5 is a Mythos class model, which we are not quite certain yet what the capabilities are. Due to various reasons over the past few weeks, the Department of Commerce prohibited Anthropic from sharing this accessibility with foreigners, which prompted Anthropic to take it down for everyone. However, after further conversation, the DOC and Anthropic have come to an agreement, and I'm assuming the patches were made to get this model back in the hands of users. And I highly recommend, if you're curious to see the capabilities of Fable 5, look up some YouTube videos or even just get in there and prompt it yourself. Before it got patched, there were plenty of cool cases of users one-shotting games like Minecraft and Roblox, so go check it out. We continue to see acquisitions and mergers within the space industry, with Rocket Lab recently acquiring Iridium, which is a satellite communication company. This was an $8 billion acquisition, and it was split between cash and stock, and it's projected this deal will take into effect mid-2027. It appears the purpose of this acquisition is for Rocket Lab to create a fully integrated self-launching platform similar to that of SpaceX. Speaking of SpaceX comparisons, Meta is also now in talks of selling their compute capacity. So over the last few years, Meta and most of the hyperscalers have been investing in data infrastructure and building out the hardware necessary to properly utilize compute. And with this being a future build-out plan for the needs of energy costs that may not have been required yet, similar to how SpaceX rented out their Colossus supercomputers to Anthropic and Cursor, Meta will be considering that going forward. Together AI raised an $800 million round at an $8.3 billion valuation, and this was backed by Aramco Ventures, General Catalyst, NVIDIA, amongst others. But Together AI is a company focused on making open source models more scalable and cost efficient. They are focused more on the infrastructure layer, whereas most applications run on top of that. But over the last year, you've seen a lot of progress with their revenues growing to over $1 billion, and many growing companies like Cursor and Cognition that are more on that application layer that they've seen partnerships with. And the main thesis here is that the AI infrastructure layer needs to have efficiency, and that's going to come a lot through the open source models, which tend to be cheaper. So it'll be interesting to see how Together AI impacts the space. All right, in continuation, over the last few weeks, OpenAI has remained in conversation with the Trump administration on a potential 5% equity stake in the company. Although it'd be an equity stake similar to the Intel deal, the interesting thing about this conversation is it could lead to some sort of public wealth fund. Now, the downsides of it could be that the government prioritizes the model that they have equity stake with, and hopefully that wouldn't have a huge impact on what the free markets do. So although it seems very early stage with where it's at, I'm curious to see how this plays out. Now, focusing more on the negative side of the AI boom, Google's report for emissions recently came back, and although they mentioned keeping in mind public safety with their build-outs, the numbers aren't coming back so favorable. And obviously in the last year, we've seen a dramatic increase with the demand for energy. But here are some of the stats on Google's data center in Mesa, Arizona. So the energy jumped 37% over last year. Greenhouse gas emissions rose 18% and water consumption rose 34%. And to put that into more perspective, electricity is up 3.5 times from what it was in 2019. And their greenhouse gas emissions is the largest annual increase since they started reporting in 2016. And then lastly, around 11 billion gallons of water is what they've consumed in the last year. Continuing the doom review of the AI build-out, the Bank of International Settlements sees a potential bubble in the build-out for AI. The Bank of International Settlements does an annually report based on economic-related data, and they noted that the hyperscalers such as Google, Amazon, Microsoft, Meta are all on course to devote more than $1 trillion in spend this year, and they kind of blanket stated that this is considered an overinvestment. They compared it to historical context of constructions of canals, railways, infrastructure, and the dot-com boom. So although all this information is data-driven, it can often be very hard to quantify the future outcomes of the technologies. And obviously the BIS has to be fairly conservative and neutral in their stance. So I don't think they'd be serving their purpose if they weren't being pessimistic about things. The nice thing about this is they did note they don't recommend central banks increase their interest rates, and this is mainly due to the uncertainty ahead. Now, earlier we mentioned Cognition, how they're at the application layer, utilizing Together AI as a customer on their infrastructure. They've recently built a capability called Devon Security Swarm, which is a group of agents that goes into each layer of your application to find security vulnerabilities. And this is the type of thing that will be absolutely necessary for enterprise systems and the continuation as AI gets involved in generating more code for those systems. It's always nice to have a second look or a third party for your cybersecurity needs. And although the frontier model's security protocols can be pretty fantastic for code, the security swarm could be that second pair of eyes. In the last week, we saw a rise in precious metals, and for the first time in 30 years, central banks hold more gold than US treasuries. And so these are signals of the US dollar holding less value. And obviously, China has led the charge on this, with them being one of our largest competitors. This is a strategic advantage for them to not hold US treasuries and have more natural resources and critical minerals, because now we're at a point where they have a lot of minerals and resources that we don't. So they're able to charge us greater margins for that. And we've also stabbed ourselves in the side by printing out as much money as we have and not reducing the federal deficit. As far as silver, palladium, and platinum go, those are all things that are pretty necessary for manufacturing, things such as aluminum and steel. And with the US onshoring a lot more manufacturing, those are going to go up in price domestically. And then lastly, the jobs report for June came back positive, but in a lesser than expected way. Personally, I'm still happy about this. This makes 4 months in a row that we've been on the positive side of things. To conclude things, I think this states it very well. After a few months of losing momentum, the signs of uncertainty are seeming to lapse and employers are starting to hire again. Obviously, there's still a lot of uncertainty with AI and job replacement. However, with the numbers being positive over these last few months, it's good to see momentum in that direction. But I would be pretty surprised if July came back positive. That's all for this week's recap. If you enjoyed the video, please do me a favor and subscribe. If you'd like to see prior weeks, you can click on the playlist over here. And thanks for watching.